There will be distraction in the process. You will be tempted to make other type of purchase. They will be appealing, buying a home, taking on this vacation and all that. Make sure you and your spouse are in unity and focusing on this goal, and you're not being distracted by every other things that come your way. From my family to yours, healthy, peaceful, and prosperous. My name is Lily Michelle, and welcome to Family and Wealth, where we help you and your family achieve financial freedom, build happy lives, and fulfill your God-given purpose. If that sounds appealing to you, click on the subscribe button and activate the notification bell. Some years ago, I bought my first home and paid it off in 5 years. In this video, I will share with you practical tips on how to pay off your mortgage early. First, buy a home you can afford. When you apply for a mortgage, the lender will usually do a house affordability calculation and determine the maximum amount you can borrow. The lender will determine this amount based on a few factors: debt to income ratio, 28-36 rule, your loan amount, the interest rate, your loan terms, property tax, and other fees attached to the loan. Lenders are usually very loose in their calculation, and they will keep you very leveraged, that the maximum amount that you can borrow will usually be enormous and difficult for you to make those additional principal payment. My advice to you is to determine your own affordability based on your take-home pay, your current and anticipated expense, and your future savings goal for you and your family. Make sure that your mortgage payment, as well as all the costs related to the home, is not more than 30 to 35% of your take-home pay. The second thing that will help you is focus and discipline. So once you have established your mortgage payment and you've reviewed your budget, you will determine the amount of money you can put every month towards as an additional principal payment. If we say, for example, I will put $1,000 every month, try as much as possible to automate that payment. So every month, $1,000 goes towards the mortgage. The $1,000 can seem a little, but it will save you in the long term a lot because of the compound interest savings you will experience. There will be distraction in the process. You will be tempted to make other type of purchase. They will be appealing, buying a home, taking on this vacation and all that. Make sure you and your spouse are in unity and focusing on this goal, and you're not being distracted by every other things that come your way. The third tip is to take advantage of any unplanned income. As soon as you set your mind towards paying off your mortgage and there is agreement, and if you're Christian, you're praying together with your spouse, the Lord will make everything to work around for your good. You will see additional money coming unexpectedly towards your way. It could be bonus at work, gifts, an inheritance, and other things. Whenever you have an unplanned income, do not use it for your own personal need. Put it directly towards the mortgage. Fourth tip is to build additional streams of income. I have to recognize in this day, and since 2020, the cost of living has skyrocketed. And for many families in affluent neighborhoods or even in a high cost of living city, is very difficult to make additional payments towards the mortgage. So there you're faced with different options. You can decide to have an additional side gig to supplement your income to put that money towards the mortgage, but also with remote working options, begin to discuss with your spouse whether it's even possible or necessary to stay where you currently are. Maybe by moving to another place, you will get better deals in terms of mortgage or in terms of housing expenses, and still keep with the remote working options, right? Keep your job and the level of income you had in the other city you were living in. So put everything on the table and discuss it. Then you also want to refinance strategically. We all know the interest rate these days, it's off to the roof. And 6%, 7%, depending on your credit score. For everyone who has bought a house after 2020, it was not the best timing. But of course, as we're going, we don't know what the future will hold. But whenever the interest rate goes down, make sure that you refinance if it goes down significantly, and use the savings on your mortgage towards paying off additional principal payment. So the last tip is how to handle unexpected expense. Paying off the mortgage is it's a long-term journey that can take many years. And in that course of time, it is expected that there will be unexpected expenses. Before you start this journey of paying off your mortgage, make sure you have 3 to 6 months of expenses saved, so that wherever the car breaks down, there is a flooding in your house, you have finances available to cover for those expenses, as well as you're keeping and staying focused and you're not distracted from your initial goal of paying off your mortgage. I hope you enjoyed this video, and tell us in the comment section if these tips helped you in your journey of paying off your house. And if you have any question, feel free to leave us a comment or contact us directly. See you soon.